And I'd like to bring back in Alex for FOMO. And we finally get to discuss Meta, as this is the story of the day, no doubt about it. Shares are up almost 15% now.
Yeah, this is a monster move on top of what has already been a monster rally off the lows. I mean, there's nothing else to say about it other than that. Of course, the numbers are impressive, Jenny. I'm sure you got some of the breakdowns. But on a high level, the things that stuck out to me, ad growth in terms of its ad impression growth was 26%. The expectation was for 14%. I mean, this is a blowout quarter.
Yeah, it really was a blowout quarter. We also saw they beat their sales estimates by almost 4%. Sales did rise over 2.5% on a year-over-year basis. And I think a lot of this can be attributed to some of the comments we got from CEO Mark Zuckerberg, who said they've been busy exploring the potential of AI to enhance their user experience across all of their platforms, those being WhatsApp, Facebook, Messenger, and Instagram. Now, during the earnings call late Wednesday, Zuckerberg did express interest in integrating AI agents into the company's flagship apps, citing the potential for usefulness and meaning, saying, to quote, "I think this AI is literally going to touch every single one of our products and services in multiple ways." He anticipates that AI agents will be valuable for individuals as well as businesses and creators alike. And to point a picture of really the scale of that, he did say when envisioning the current integration of AI, although he did not lay out any specific plans, he said that more than 20% now of the content you see on Facebook or Instagram feeds is being curated by AI, and sometimes even posts that you don't see or don't follow, but that's perhaps why they're enhancing the user experience. I have to say, I feel a little bit mixed about that, because I've noticed it myself that you'll see things that you don't follow, you wouldn't remotely follow, and they still do appear on your feed, but it seems to be paying off. He highlighted the fact that they've seen over 24% growth in their user engagement since the introduction of Reels, which is largely attributed to the implementation of AI-powered recommendations. He also says these efforts will continue to help them monetize their apps, with Reels monetization's efficiency actually rising 30%, and Instagram over 40% on a quarter-over-quarter comparison. So Reels are faring well for Meta platforms, and that's something that has been, I'd say, an area of scrutiny given the way they compete directly with, say, TikTok. But it seems to be faring quite well. I mean, clearly the street likes what they saw, and I'd say when looking at Mark Zuckerberg, he's one of those figures that I feel like people love to give him so much flack, but all in all, he has had nearly perfect earnings calls the last 2 quarters where he's able to say exactly what the street wanted to hear.
Yeah, I think it's easier now too, Jenny, considering the fact, I mean, they're losing $4 billion still with this Reality Labs segment of the business. This has been their growth investment that they've made. But right now, the street's excited about something in artificial intelligence and looking for the actual applications of those technology, and how ultimately, as a shareholder, say I'm a shareholder in XYZ company, and XYZ company is investing in AI, I'm okay with that if I think that that AI is going to turn a meaningful, return on my investment. It was a hard sell in this metaverse investment. People don't like putting those Oculuses on. For the most part, it's not been a thing that has gotten mass appeal. Digital real estate and these expensive, little JPEG art things, it wasn't mass appeal. It was very niche, and it, quite frankly, has already, gone up and come down tremendously. So the hype around that has come and gone. It may come back, but it hasn't. AI, the hype is real. It's here, and there's real things that you can put down on a business plan and show shareholders, show board members, show your company, and say, this is how this is going to help us. It's not some pipe dream down the future. So. Hey, it's a blowout quarter. I said that at the beginning. I stand by that. We'll see where it goes from here. They still got a good $150 before they're at all-time highs, but it seems like that could happen again. When they were at $90, you were thinking, where does it go from here?
I know. Just put today's move in perspective. We're now up almost 100% so far this year, up over 172% from their 52-week lows. Like you said, we're at 52-week highs. We're not at all-time highs, so I think everyone should calm down a little bit. But all in all, I mean, you mentioned NFTs, the concept of NFTs. I haven't heard that term in about 6 months because it's fallen so far out of favor with all things AI seemingly boosting street sentiment, a lot of Meta's results. So there is something to look forward to here, even going forward. So that added momentum, and I definitely think the FOMO feeling is to the upside today, no doubt about it.
Yeah, I think so, and I think that it can be misguided at times. I mean, you just watched a stock literally go from about $90 a share now to $240. Okay, it also went from about 385 down to 90. So I think when you put it in those perspectives, and even look back just over a year, it's basically gone flat now, year over year. I think that you can kind of rationalize to yourself that there could still be upside given this monster run. But you can't feel necessarily that you're buying the lows anymore. I think that conversation is gone. So it's no longer a buy low, sell high situation. It's a maybe buy relatively high and hope it goes a little bit higher situation, especially today with the stock up 15%. For context, Jenny, we're talking about a $600 billion company. 15% is a massive, massive number. In terms of market cap, you're talking creating Chipotle's in terms of just how much real value this has gone up today. So keep that in mind. But that considered, let's look at an upside move for this particular trade in this illustration. We're looking at buying a call condor, seeking to reduce the exposure while benefiting from an upside move. This one goes out to May. We don't have an earnings event. We just had it. And so giving ourselves a little bit of duration, possibly even for this just to kind of find its new price level and potentially retest back towards some of those gaps that we had seen on the chart around earnings last year at this time. And so what we're looking at in particular is buying a $10 wide, 240, 250 call vertical while simultaneously selling the 260, 265, $5 wide call vertical. The concept here is to create a strategy that does not have upside risk. Same thing that we just talked about at Amazon. You don't necessarily want to be bullish a stock, do a bullish strategy, but have it go too far to the upside and then end up losing money. So this one does not have theoretical upside risk. If it went all the way through all of our strikes, it basically would level off at $150 profit. On this one, though, best case scenario would be a move between 250 and 260. And the reason that is because, well, if that happens, Jenny, you have this $10 wide call vertical that's being purchased work towards $10, while the $5 wide call vertical works towards 0. And so because this is done for 350, break even at 240, 350 can expand to as much as a 650 profit in that $10 wide window. A little bit over a few weeks till expiration. So plenty of time for this to unfold if it's going to.
And we, of course, do have some downside protection if we see today's move sort of crumble tomorrow when we get Snap, as well as Pinterest's earnings, which is always a possibility, especially when we see a 15% move on the session. But that'll do it for our FOMO segment.